Hey everybody, John Napolitano here with you at Stock Trading Pros. Just wanted to point out a couple of things. I wanted to create this video because lately markets have been a little bit volatile. The Nasdaq actually pulled back to its 20-day moving average for the first time in a while. So the alarm bells are not completely ringing yet, but things are starting to look a little bit more bearish. So one of the things new traders have a lot of trouble with is betting against the market or shorting. A lot of people aren't really familiar with what that is exactly. Basically, there's a lot of different ways to bet against or go short the market. I prefer to do it the best way through the options market, which to me is the most efficient in many ways. I'm the option trading instructor here at Stock Trading Pro. So if you're interested in videos like this, please like and subscribe this channel and check out our education as well as our website, which will be on the bottom description as well. So I'm going to jump into an example. That's really the best way to show this. And this is Thinkorswim platform, which I'm going to line up with you guys right now and share my screen with you. So basically, one of the most important things to do is get a good platform that you're comfortable with. Thinkorswim is one of the favorites. There are plenty of others out there, so it really doesn't matter what platform you use. But let me just point out a couple of things. I'm going to use Coinbase as an example, but before I get into like the nuances of why I think this is a bearish opportunity and why I think we should go short this particular name, I want to compare it to what the Nasdaq is doing. What you want to do when you're looking for a short opportunity or a bearish opportunity is you want to try to find something that is underperforming the market substantially and something that maybe started to break down prior to even the broader market weakness. Now, the Nasdaq, like I mentioned here, you can see here yesterday, it pulled into the 20-day moving average, but it's still in quite a substantial uptrend. So like I said, the alarm bells are not ringing, but we did have a pretty significant pullback where what I want to do is I want to add some bearish exposure to my trading portfolio. And I chose Coinbase because if you look on the left-hand side here, you can see that for several weeks, Coinbase has been trading below both moving averages, and it looks like it sort of wants to break down here. It's kind of hovering near this really, really tiny area of support right here. Now, if it breaks below here, there really isn't any much place for it to go. If the next area of support is all the way down here, 260. So, and it is a very big and fast mover. You can see these large outsized candles throughout the trading, whether it's up or down. Coinbase is a pretty volatile stock. It does have a pretty substantial ATR. The ATR actually, just to review here, is about $17. So that's pretty substantial. So that's kind of what I look for bearish opportunities, something that's basically already underperforming the broader market. So this is why I chose Coinbase. So right now, once I decide to put the trade together, I have to figure out what my target should be. Now, one of the things I teach in our classes in our community is you always have to have a plan before you get into a trade. So now that I've identified what opportunity I'm looking for, essentially what I want to do is set up my acronym. And my acronym, which I use for every single one of my trades, is T.E.S.T.S. Tests. If you don't have your tests, you don't have your trade. It's that simple. So stick with me and I'll show you exactly how to go through it. The first T is your target. So if you take a look at that chart right there, let me make myself a little bit smaller. You can see here that my target is probably going to be around that 260, 270 level, something like this, where I do expect it to break through this little wimpy area of support and maybe make a move lower here. So this is kind of the area I'm targeting on the bearish side. So I have a specific target in mind. And in the options market, what you can do is you could put together a strategy called a bear put spread, which allows you to go long one put option, which allows you to bet against Coinbase, but it also allows you to sell a put option underneath it at this target area of 260 or so. What that does is it actually cuts your cost significantly. Now you lose a little bit of downside. So if Coinbase was to go below 260, you're not going to make any more money. But let me tell you something. When it comes to trading, one of the things you have to realize is it's about singles and doubles and consistency, not always hitting home runs. So I like to have a target in mind when I'm trading. I'd much rather have consistency than 10 losers and one big winner. That's just not the way to be consistent and to be sustainable in this business. So my target is around 260 or 270 at this point. The E in test is going to be my entry. Obviously, right now would be a good time to do it. If we're not in live trading right now, as I'm recording this, it's around 8 o'clock in the morning. So, but right now it looks like it's trading at its lows. Unless we have if we get a substantial bounce in the morning, I probably will wait and see if it rolls over. But if we get an open a little bit below yesterday's close, that's going to be my entry. Now the S in test is for stop. Essentially, probably one of the most important parts of that acronym is your stop. You do not want to lose the entire thing. So let's just put together what the entire thing is. I'm going to go ahead and I'm going to go ahead and go out about a month. I want to allow myself time. I don't want time decay to affect me, so I'm going to go out at least 30 days when I enter a long put option, which is a short trade. I'm going to go out at least a month. So I'm going out to September 19th, which right now is exactly 30 days. And I'm going to buy the 305 call options. I'll make myself a little bit smaller again here. And you can see here, the 260s, which is my target, has a $5 credit that I could receive. So instead of paying $2,100 for a put option, think about this for a second. If I go ahead and sell those 260s that are out of the money against my long 305s, that gives me a nice little trade. Instead of paying $2,100, check this out. If I put together 305s and I put together, so I'm going to go long the 305 puts, which is a short position. I'm betting against Coinbase, don't forget. Then what I'm going to do is I'm going to sell the 260s because I don't expect anything to go below 260. If it does, again, I lose a little bit of downside. But look what I did. I went from a $2,100 trade all the way down to a $1,563 trade. Now, again, the S in TESS is for stop. I do not plan on losing my entire $1,500. What I do want to do when I place this trade is place a stop order for usually a percentage of my premium. So if it's a $1,500 trade, I'm going to weigh my risk parameters. I'm going to weigh the size of my portfolio. And I'm basically going to set a percentage of premium as my stop. Usually between 30 and 50% of my premium is all I'm willing to risk, okay? And that should be something you put in your trade plan, which is another thing we talk about in our community. You have to have a trade plan that makes sense. So I'm putting together the risk reward profile in real time right here, and you can see that for $700 of risk, let's use the math. Let's keep the math simple. Let's say I use a 50% stop. I'm willing to risk $750 for the potential of making $2,937. That is the risk reward on this trade. That's a pretty good deal. So I'm not necessarily expecting it, again, to get completely to the target, completely in a perfect world, completely, exactly what I expect it to do, but that is the ultimate reward I would get. So the final thing is my time frame. How long do I plan on being in this trade? Well, based on the candle activity and based on the volatility of Coinbase, it could go pretty fast if it does decide to break down. So I would say 1 to 2 weeks, but you have to have a time frame in mind when you're planning your trade. Now, I will abandon this trade prior to it going down 50% if market conditions go against me. In other words, this is a bearish trade. I think it's going to go down to that 260 level. So, hey, if there's a major announcement in Coinbase, if there is a major announcement in the Nasdaq, let's say technology shares soar and they bounce or what have you, I'm going to abandon the trade. It's not about being right all the time. It's about managing your risk. Jesse Livermore said it the best. The difference between a gambler and a stock trading speculator, which is what they used to call us back then, back in the 20s and 30s, a stock speculator is obsessed with risk management and what they can possibly lose. A gambler is more concerned with how much money they're going to make. So I showed you what the risk reward was. I showed you what the profit was. I showed you what my stop was. That's the T.E.S.T.S. The last S is for sizing. How big do you need to be? Well, that depends on your portfolio size. Usually about 1 to 2% of your entire portfolio risk should be tied up in any one loss for your trade. So that $700 loss that I was talking about, that should be 1 to 2% of your portfolio size. If you can handle more, if your portfolio size is bigger, then you can do 2 contracts and so on and so forth. That's sizing. Once you put T.E.S.T.S on a piece of paper, you now are ready to actually place the trade. If you don't do that, you're just gambling. You're just guessing. You have no game plan in place whatsoever. So keep that in mind when you're putting these trades together. And that is pretty much it, folks. So I hope you guys got this lesson and it made sense. I think one of the things that I think a lot of new traders do is they just don't know how to go short the market. Keep in mind, Goldman Sachs and all these big investment banks, they made most of their profits in 2008 when the market was completely deteriorating. They had a stellar year by putting on trades like this. So if you like ideas like this, or if you like strategy like this, definitely like and subscribe to this channel. Check out our website, and most of all, check out our newsletter and our education as well. So until next time, I'll talk to you guys soon. Take care, everybody.